Well, how about
Good to see you.
He was throwing down the gauntlet, wasn't he? Can Lyft follow suit?
Yeah, I mean, it's a heavy lift, for lack of a better term. You still have to have some OPEX discipline in play. But look, the market is rationalizing at this point. Lyft saw significant leverage on sales and marketing in 2019, and we think that'll continue in 2020. So there's a lot to still prove out here, but as long as growth is good and the market is rational, there is a path toward profitability for Lyft.
Last year, Lyft CEO Logan Green had said it would be profitable by the end of 2021 if they exclude some costs. Well, excluding those costs, one, could be pivotal because anybody could be profitable if you exclude enough costs, right? And two, because Uber's the bigger competitor now, does Lyft have to try to revise that target date of profitability?
Well, first, if we're comparing apples to apples, Uber's excluding a lot of the same costs. So you've got to put that in context right there. For the other component, by, say, Q4 2020, again, there's a lot that Lyft has to do to get that right. Part of that's going to be top-line growth. The rest is expense discipline. I think there's a chance you could see the profit target moved up toward the first half of 2021, but I'd be surprised to see Lyft come out and match Q4 2020.
You know, I guess if you're, the classic textbook would be if you're trying to get profits up, you either cut costs or you increase revenues, which often means increasing prices. Why doesn't Lyft increase, why don't they both increase prices to drive profitability?
Yeah, it's a great point, and they actually have both been doing that. So Lyft was increasing prices really throughout the spring period. You saw a little bit of elasticity of demand come into play. Active rider growth slowed the past 2 quarters. We think that continues a little bit in the 4th quarter. And then as some of the benefits of shared rides really start to proliferate, we think you'll see active rider growth improve over the second half of 2020. So really, it's just be a healthy market, show some OPEX discipline, be less promotional, and there's a big path toward profitability for both companies here.
Does Lyft have an advantage in the idea, and I may be completely full of it in saying this, that they feel to me like the purer play in this space than Uber? Uber has Uber Eats, Uber has autonomous vehicle work. I don't know what other areas Lyft is involved in, but they feel like the purer play.
Yeah, it's a great point, and Lyft is the pure play. With Uber, to your point, you're getting a food delivery business. You've got the freight business, which Lyft has no interest in. And both companies invest a little bit in autonomous, but Lyft not to the same degree as Uber. So really, you're getting a pure play on the North America market. You don't have to worry about international competition, which has been a big issue for Uber in the past. So we think Lyft is oftentimes the cleaner story of the two.